Well, thanks so much for joining us. As not-for-profit financial institutions, credit unions put people first, not profits. Currently, Washington is moving fast on some tax reform, and bank lobbyists are using the opportunity to push Congress to add a new tax on credit unions. In this making sense, Forest Area Federal Credit Union CEO Alex Lutke and EVP Justin Wolf discuss why credit unions are in fact different from banks and how this new tax could affect their members and the communities they serve. Gentlemen, thanks so much for joining us. All right, so that we all understand, because I think that's important that we understand the groundwork, what is really the difference between a bank and a credit union?
Well, Mark, to start out with, in many ways, we're similar, right? Okay. We offer many of similar products and services. You can have a checking and savings account at a bank or a credit union. You can get a loan, a mortgage, any type of borrowing needs at a bank or a credit union. And generally, we all exist. We want to do a good job for our members, for our customers at banks. We want to take care of people, and both entities want to give a fair deal, offer excellent service, all of these things. So the nuts and bolts of what we do can be very similar. How we do it can be a little bit different. So a bank is a for-profit entity, generally owned by shareholders. It might be a privately owned entity. It might be a publicly owned entity. Whereas a credit union is not nonprofit and it's owned by its members. In other words, no one person owns any more than the next member. You can't own multiple shares. You just have one vote. Whereas in a for-profit corporation, such as a bank, one person can own multiple shares, have maybe more votes in a meeting, and ultimately down to the profitability of the entity could profit more from it in a bank setting. Whereas the credit union is, one member is one shareholder, one vote, treated equally in those terms. So from there, what is the purpose of each? And generally in a bank setting, the underlying purpose is for the shareholders to earn a profit, right? Whereas at the credit union, because it's a cooperative, member-owned, equal shares, it's there to serve the needs of the members, their financial needs. Okay. Then we get into differences. Well, who can be a customer at a bank versus who can be a member at a credit union? Banks are pretty much generally open. Anybody that qualifies, it can be a customer at a bank. Where at a credit union, there may be eligibility requirements to meet. You might have to be part of a certain geographical community or part of a special interest group or an employer group to be part of that credit union. And then next, we can go back to profit a little bit. What happens to the profits in each entity? Mm-hmm. In a bank, they generally go to the shareholders. In a credit union, it's returned to the members via investment in their community, into the infrastructure of the organization, possibly in lower interest rates, lower fees delivered to those members. So, those are some of the primary differences that you're going to see. And then finally, I'll wrap this part up with, while we're regulated similarly, we fall under two different bodies of regulation within the government. The banks are regulated by the FDIC, whereas credit unions are regulated by the NCUA. So very similar things, when it comes to deposit insurance, they're the same type of insurance, or it's offered by two different groups, but it's the same level of insurance under generally the same terms, but two different governing bodies as we follow the rules and regulations for deposits and loans when it comes to banks versus credit unions.
Yeah, a couple of more things to add to that, Mark. Mm-hmm. Another differentiation between the two, when it comes to a board of a bank, they're typically paid. So the board members on a bank board are paid. For a credit union, it's all volunteer. So they come here to volunteer their time because they're committed to the mission of what credit unions are. The other component to it that plays a big role in what we're going to talk about here in a minute is the way that each different financial institution can raise capital. So let's start with defining what is capital. So what it is it's a way for an organization to have a cushion or skin in the game, if you will. The way that it is for a credit union is it's the retained earnings. And what that means is it's all of the income that the financial institution has earned over the lifetime of its existence. For a bank, they have it through retained earnings, but they also have their shareholders, as Justin was talking about. They can raise money through shares to be able to grow their organization in a way that they could probably do it faster than a credit union because of their different means in which they can do it. Because we're owned by members, one member, one vote. We don't have the ability to raise capital through shares the way that the banks do.
That makes sense. So if I'm understanding this correctly, there are a lot of similarities between banks and credit unions, and customers can probably get a lot of the same services. But really what happens from where you guys sit as opposed to where I sit, they operate very differently. And one of the things that I understand, and correct me if I'm wrong, is that credit unions are tax exempt. Is that accurate?
Yeah, so to be clear on that, we are income tax exempt. We do still pay all of the employment taxes. Okay. We do still pay all of the property taxes. There are about 10 different taxes that credit unions do in fact pay. We are just income tax exempt. So that's one point that I think it's important to make in this is what exactly we are exempt from, and it's income taxes.
And why are credit unions tax exempt?
Because of our purpose and what we are trying to accomplish, and the people helping people motto versus being not for profit versus being shareholder driven, returning our profits to shareholders as the banks do. We'll be very clear, there's not one good model over the other. We feel that credit unions are a strong model, but it's just the two different ways the two institutions operate.
And that's been in place for a while?
Since credit unions were founded over 100 years ago, yes, that's been the model. Credit unions are tax exempt from income taxes. Banks do pay income taxes. Okay. And the idea is that credit unions then have the ability to return that to members and better rates on loans and better rates on deposits.
Okay, that makes sense. All right, so what is behind, we've heard the phrase, the don't tax my credit union movement. That suggests that something is potentially changing. So what's behind the don't tax my credit union movement?
Yeah, without getting too deep into the political world, there is a number of things that are happening from a tax perspective with the current political landscape. And so what's happening is they're trying to find ways to pay for the tax cuts that they have implemented or looking to implement. And so there's a list of different organizations that they're looking at to say, okay, is there ways that we can tax these individuals to be able to find the funds to pay for the other tax cuts?
Okay.
Some of those tax cuts are good. Others, it is what it is. And so they're trying to navigate what that looks like. And what's happening is, as you mentioned in the intro, the bank lobbyists are using it as an opportunity to get credit unions to be in that to pay for those tax cuts that they're trying to implement.
So, and I imagine that goes against when it was originally determined that credit unions would not be tax exempt, the logic was because of how they deal their money. So suddenly saying we're going to tax the income, right? We're going to tax the income kind of goes against the original logic as it was set up forever ago, right?
Exactly.
Okay, so I'm understanding this. All right, so what will happen? Crystal ball this. What would happen if a credit union is having to deal with this income tax increase or income tax?
Yeah, so there's a number of things that could happen. And the first and the most obvious is if that was to happen, credit unions would have less income to be able to return to the members. That's the most obvious. That's the way that it'll impact the members the most is the rates may look different than what you see today because we'll have to spend more to be able to get back to pay in taxes. There's a number of others unknowns as much of this political landscape that we're in right now. There's a lot of unknowns of what could happen in that. What they're also talking about is just taxing billion and above credit unions. So how does that impact everyone in the landscape? Well, it'll have a trickle-down effect, and it will end up impacting every credit union, regardless of whether they're taxing them or not.
And Alex, if I'm understanding this, and I'm repeating, I think what you're saying, but correct me if I'm wrong. So the credit union would take that money and put it back basically into the credit union, or back into the services, back into the community.
If we were not taxed, is that what you're asking?
Not taxed, that money, the income that the credit union makes goes back into the community. Exactly. If some of that is being taxed and not going back into the community, there's only so much income. You can't, you legally can't print more money. And so that money is now not going back into the community in whatever way, shape, or form that a credit union is putting that money back in. Is that accurate?
That is 100% accurate. Yep. And every credit union has their different ways of putting the money back into the community. I think we all do a great job of doing that, but there is different ways to do that back into the community for sure.
So that's a concern, obviously, if you run a credit union, because you're impacting the way you do business, right? Mm-hmm. Like if that money is now going to pay an income tax, it's not at your disposal. How does, if something like this were to take place, so it sounds like it becomes a concern for a credit union in terms of how do we do business? What kind of impact does that eventually trickle down to the member at? How would the member notice if suddenly the credit union was paying an income tax?
Yeah, I think what I kind of alluded to there just a minute ago, the rates would look probably a little different than what you have come to know from credit unions. The credit unions will likely look different. What that looks like is still unknown of how we can do that. So what I mentioned early on, when it comes to the different ways that capital can be raised, right? If we are taxed, but don't have the same benefits of a bank to be able to raise capital through shares, credit unions aren't going to be able to grow in the way that we are today, because we'll be limited because we don't have the income that we once had. And that's the only way that we have the ability to grow is through the revenue that we can drive. So if we don't have the ability to drive that revenue to be able to grow, we are at an unfair disadvantage to what banks have, where they can raise it through shares. So credit unions will likely slow growth, and you may not be able to get the same innovation and same growth and technology that we've been able to have in the last 5 to 10 years.
And when you going back to your question about, what are the members going to feel? What's the impact to them? Many credit unions, ours included, were grown on that motto of people helping people. It can be said that often what credit unions are doing is working to serve the underserved, bank the unbanked. And it's filling some gaps where perhaps sometimes the banks just aren't in geographical locations where there are communities that need those services. And frankly, the reason they're not there is likely because it's not profitable to do so. And the nonprofit status that credit unions have allow us to help serve those underserved memberships. And, as we watch our membership thrive and grow, what we see is they share their story with other people, friends and family. And, we're able to expand our footprint. We're able to expand our membership base and help more of those people that are in like circumstances. And, by imposing a tax on credit unions, it may become more and more difficult for credit unions to operate in that space, serving the underserved, because it's going to be restrictive from a financial aspect to do so. So we would just hate to see these underserved markets where credit unions are filling that gap, perhaps no longer be able to do it in the same way they used to.
Yeah, and to Justin's point there, it's well known that banks have been closing branches to the tune of tens of thousands over the last 10 years, where credit unions have actually increased their branch footprint over that same time frame. Our credit union in particular, we've opened 3 branches in the last 5 years in different communities that we've never been in before, some of which we are the only institution in town, or there's one other shop in town. So we do serve a different group of people than what the banks typically serve.
So it's interesting because I think when you talk about serving a community or serving a demographic, as you said, sometimes you have to have either geographic qualifications to be a member or a skill set, a trade, teachers union or whatever, whatever you would have to do was kind of how it initially started. But there are still some fundamental things that hold true for credit unions, as much as the world has changed and financial institutions have changed, everything like that. Paul, that has stayed consistent and true. You're for credit unions, whatever credit union is there, really does serve the underserved, serve a community, or serve a specific. That hasn't changed, right?
Absolutely. I actually just saw a graph yesterday that showed the demographics of the typical bank customer versus the demographics of a typical credit union customer. Yep. And just to generalize, the average income of a credit union member is significantly less of that of a bank customer. And so that just shows that credit unions are in fact serving their purpose of serving those that may not have the ability to bank elsewhere. And we are prideful in that we do provide an option for those individuals that may not be able to go elsewhere.
So again, if I understand this, between the 3 of us, probably none of us really enjoy paying taxes, right?
Sure.
All right, we go all in agreement on that one. All right, good. So if the bank or if the credit union has to use some of that income to pay taxes, just make more money, right? Just make more money. But you, based on the fact that you're a credit union, you do not have the access to shareholders, to expanding that, because of the very nature of what you are. You are members. You are the Green Bay Packers of financial institution, right? Like you're community owned. Right?
I love that analogy. Yes,
you can use it. You can pass it along. That's fine. But you do not have the biggest option. One of the biggest options for banks is off the table because it's fundamentally not in who you are. You can't change the way you do business because that's the very nature of why you exist, right?
It's 100%, Mark.
All right. So what if people are concerned, people are, view the value of a credit union or members of a credit union, if they have concern, can they speak up? How do they be heard?
Yeah, and just to be clear on this is not a conversation for tomorrow or for a month or for a year from now. Like, this is happening right now with all of the lawmakers at the federal level. This is a federal issue, and so if people are concerned, we have sent out emails to our members, as other credit unions, to let them know kind of the urgency and what to do. If you go to our website, I believe that there's some different literature in there of ways to be able to reach out to the federal lawmakers and communicate to them your concern of how this can actually impact individuals, viewers, our members, and they can send out letters right from there. Just put in your information. They'll send the letters out. Thousands have been sent in already to our local lawmakers and how we can make an impact there.
If people want to learn more, we often encourage people, whether it's a banking topic or anything like that, go into your credit union and ask them. They'll be glad to help you. But if people want to understand this better, and I have a feeling, like a lot of things, this changes hourly or daily, right? But if people want to stay up to date on where things stand and understand a little bit more the impact that we weren't able to get into here, and understand the logic and reasoning on both sides, how do they do that?
Yeah, I would say do your own research, because there's a number of things that maybe we weren't able to get into today. That information is readily accessible of things that could happen, things that may happen if the taxation goes into place. Do your research. There, like I said, you can get onto our website. America's Credit Union, who is our political advocates on our behalf, they have a website devoted to this as well. So you could go to America's Credit Union's website. It walks you through kind of what the situation is. The bank lobbyists that are trying to make this happen, the different components there. Also, as always, like you mentioned, come talk to us. Yeah. We're happy to share what's going on, our views, our takes, everything that we're thinking about. We're happy to share with whoever wants to hear. So,
yeah, that goes for this pending tax issue against credit unions or any of your financial needs. Reach out to your trusted advisors. If you work with a bank or credit union and you have a relationship there, give them a call and have a conversation about it. And for any needs here, you can pick up the phone and call our credit union. Feel free to ask for Alex and I directly. We're not hard to get a hold of. We're always glad to have a conversation.
Yeah, and one other thing, Mark, that I think is important to know, but I want to say it before we walk away, is the credit unions are united in this. Okay. They talk about billion and above that they may be taxing. They've talked about taxing all of them. We definitely stand united, and we don't want a single one to be taxed. Even as a smaller organization ourselves, we're under that $1 billion mark. We still don't want to see the $1 billion credit unions taxed, because it will have an impact on all of us. Even though they may say it's only going to be the top 450 credit unions out of 4,500 in the U.S., it's really not the case. It's going to have a nationwide impact, regardless if they only tax the top 10%.
And I'm going to put you on the spot here, because if there is this benchmark or this line of not impacted, impacted, do most or all credit unions basically work under the same philosophy, the same rules and the same guidelines as you've explained to our viewers up to this point?
Yes. As credit unions grow larger, they're able to do different things. And that's the bank argument, is that our credit unions staying in their lane because of the change in the field of membership, where we can have more members now than what we ever used to be able to have. That's the argument. But the fundamentals of a credit union have not changed beyond that.
And because of those fundamental principles that we've discussed, and also some of the benefits that / may lead to some limitations, there's not a way to overcome this, no matter how big a credit union you are. Right? Like, I mean, the pie just gets bigger, but it's still gone, right? Like if they're operating under the same rules, they can't come up with that income tax money some other way and still be able to provide the services and give back to the community, whether that's in lower interest rates or actually giving back to the community. They're not able to do that. It's just everything's magnified on a bigger scale, right?
Mm-hmm. Yeah, absolutely. There's a lot of things that are unknown that could happen if something goes through in taxation on credit unions. A lot of unknown.
And that's a real concern for credit unions.
Absolutely. Yep.
All right. Well, gentlemen, I appreciate your time so much today, filling us in on this. We'll keep a close eye on Washington, as I'm sure you are as well. And I hope you guys get outside the rest of the afternoon today, because it's a beautiful day outside Northern Michigan. Have a little sunshine, a little fresh air, and enjoy that, because who knows what tomorrow will bring, right?
Absolutely. Appreciate it, Mark.
So, hey, gentlemen, thank you so much.
Thank you.